here today. My name is Miriam Altman Reyes. I am currently, I wear lots of different hats. I am on the Brown Club of Greater Miami's board. I'm also founder and CEO of a company called Grassroot Ventures. We support early stage ed tech and workforce founders through a studio that we've developed, a startup studio, providing services and support to founders, advising, and getting in there with them, being an extension of their team, as well as investments. Started this about a year, not even a year ago, but 9 months ago, and it's really grown fast, which I think is a testament to the interest that there is in the topics we're going to talk about today and social impact. Previously, I was one of the co-founders and the CEO of a company called Involved. We were an ed tech company really focused on solving the chronic absenteeism challenge, which unfortunately continues to be a really big challenge that you may be reading about in the news from time to time. We built an ed tech platform over the course of 9 really fun and sometimes very arduous years, and we sold the company in early 2022 to a publicly traded company called PowerSchool. So that's where I cut my teeth in entrepreneurship. And before that, the reason that I got into education in the first place was that I was a teacher in New York City public schools through a program called Teach for America, and really saw challenges around lots and lots of different challenges that students and families were facing. But the most really foundational that I found was student absenteeism. So that's what really kind of led me to, from my experience on the ground, go on to start a company, sell the company, and now go on to what I do today for my day job, which is basically helping other entrepreneurs be successful. So a little bit about me, but I will stop talking about myself now. I will also say, if you don't recognize our names are the same, or that our faces look the same. I'm also here as very proud and honored daughter of our featured speaker tonight, Frank Altman, who is the author of A New Capitalism, and very excited to be able to ask him a couple questions about the field, about his book, about his inspiration, and then open it up to our esteemed panelists in the second part of our conversation today, and then open it up to you to ask some questions. And as we wrap up at the end, there should be some time for us to continue to mingle. We encourage you to consider lots of food, I mentioned earlier, but lots of food for you to enjoy, and books as well. If you'd like the author to sign books, they are available at that table. So with that, I am super excited to get into some talk about the book. So the first question for you, Dad, is your personal story informs a lot of why you focused on this work. What are some of the most pivotal moments in your life that have been milestones on this journey?
All right, how far back do you want me to go? I would say that I describe my sort of inspiration, how my journey came to create found a community investment fund in 1988. That was a very important year. I found out from a friend here in Miami that was my Saturn return year. And so I don't know what a Saturn return year is until I learned about this. It was the year that I founded, I should say that. It was a little earlier than that, but I ended up starting my role in my career in public policy after graduating in an interdisciplinary major at Brown University. At that point was very new and interesting, called public policy. And I have to say a few things about Brown, because I'll come to that. I'm going to go back, start a little back before that. I grew up in a household that was very much focused on the community and on our religion. I grew up a Lutheran. Had a bunch of Lutheran ministers in my family, but it was all about serving. We exist in this world to serve. In some respects, the training was to serve the Lord. And how do you dedicate your life to that? Well, early on in my high school period, I got involved in something called the International Walk for Development. It was the first time in the United States, cities across the United States, that the concept of giving pledges and walking miles to raise money for social purposes was initiated. And we had 50,000 walkers in the Twin Cities walking 28 miles between downtown Minneapolis through the city of St. Paul, the capital city of our state, so the state buildings, and came back and celebrate it. It was a pivotal moment for me because I learned about networking. I learned about how we work with students from a whole variety of schools, and we put this together. It was pretty much a student-run effort under the auspices of the American Freedom from Hunger Foundation and a group of the United Nations. Half of what we did was we had to choose the nonprofits and NGOs that were going to receive the proceeds of the money that we raised. So the students were involved in identifying, doing due diligence. That term wasn't being used at the time. And half the money had to go to domestic charities, and half the money had to go to international charities. It was a phenomenal experience for me. And I repeated it. That was in 1970. We repeated it in 1971. And then all of a sudden, all of the big nonprofits figured out this is how they could raise money. So everybody got a walk, and our walks kind of just disappeared. But it was an inspiration. The idea of development was what was seared into my mind during this process. That we have the opportunity to use not only public sector resources but charitable resources, volunteerism, and others to create a better society. And I'm happy to say that several of the nonprofits that we invested in back when I was in high school are now huge players in the Twin Cities and St. Paul. And I've done great, but I have to take credit for seeing them develop. But understanding who had the potential, I say that we did that. So that was an inspiration. Then in '82, which actually was my Senate return year, I decided I was going to run for state treasurer at the age of 29. I got involved in public policy and politics. I didn't win, but I was recruited by the incoming governor, Rudy Purpich, to serve on his staff. So I did a stint as a policy advisor to the governor, but particularly focusing on the issues of energy, environment, natural resources, housing, and agriculture. I knew a lot about some of those. I still can't tell you how to get a big fish, but that's another story. And it was while I was working in the state government that we had an interesting sort of prologue to where we are now at the federal level. We had a very divided legislature. It was so divided that the House was tied. And we were coming out of a recession and trying to save a lot of businesses in rural America, in rural Minnesota. The government was very much focused on this. The legislature didn't want to give them anything they were asking for. So I had this idea that we ought to look at the loans that the state had made and sell those loans. The state wasn't in the business of holding loans and earning 2%. They could take those loans, sell them at a market rate, and then put that money back on the street right today when the money was needed, not waiting 10 years for the loans to pay back and so forth. Then we identified a series of local organizations around the state, about 300 what we then called revolving loan funds. We said, well, they need liquidity too. So the idea of creating community investment came out of that nexus of the problems that we were facing funding state government and the opportunity to maybe create a different model and a model that was innovative. And so let me just finish my Saturn story. So we started CRF in 1988. That was the year that Lauren Altman, my other daughter, who was running behind the scenes and keeping me posted, was born. And people look back and say, how in the world did you start a company and have a kid at the same time? Now it's come to the next generation. Just saying. So that's probably more.
Thank you. So talking a little bit about the book, and don't give any spoilers, because not everyone's read it yet. But what was your inspiration? You talked a little bit about inspiration, but why did you decide to write this book at this time?
Well, laboring in the field of community and economic development, really the field of capital access, the ability to drive capital to places where it doesn't normally want to go. And those are under-resourced communities, oftentimes communities of color, women, LGBT communities that oftentimes have a very hard time accessing the traditional financial markets, whether it's banking or in a larger scale, the capital markets, Wall Street, or money managers and others that run trillions and trillions of dollars worth of investments. They don't invest in little Havana. They don't invest in Overtown. They don't invest in many communities around the country that are starved for capital. They're communities where people have great ideas, but they don't have the networks of sponsorship to be able to get the capital that many of us in this room are able to do, because we have Brown students here. We have people who have connections that have families that understand how this works, but in many communities that is a limitation. So the idea really was, how do we fix capitalism in a way that markets and the public sector and charitable sector, the philanthropic sector, can work in harmony to drive capital into these areas where capital access is so difficult. And there's a whole history that I go into in the book. I won't spend a lot of time on it here, but my assessment of our capitalist system is that our American capitalism is in crisis. It is broken. You may think it's not. It is broken. Just like the climate crisis we have a crisis of capital, a capital access crisis that is continuing to widen the gap between the haves and have-nots. We need them back to my phone. Okay. Here, I thought I had a loud voice. You want me to start over again? Capitalism is literally moving us apart in many cases. Yet we have a market system that has been so effective at delivering goods and services when the market is working. And so I wanted to write a book that talked a little bit about my journey and the things that I experienced, that we experienced as an industry that literally developed. I'm sitting next to one of the great people in the community development finance industry, Tony Brown, who started to say we need institutions that are formed for the purpose of serving low-income communities and low-income places, and being the bridge to those capital markets that can deliver through specialized institutions the capital that's needed for investment in small business and affordable housing, community facilities, daycare, charter schools, a whole variety of things that are necessary to help build vital communities. So that was sort of my motivation. And finally, I was motivated by getting a little bit. I'm still 29, but chronologically, I'm 71, and there's another generation that's rising right now. Many in this room are starting to manage assets, and I want people to think differently. I want this generation that's rising to demand a different capitalism, to demand that the people managing your 401ks, your 403bs, your IRAs are aware that there are opportunities to invest money for good return, but also do good with that money. And there's a whole marketplace out there that doesn't feel much like that. They think that capitalism is getting the highest return, and we're not going to worry about the negative externalities. That's a term that somebody might have heard before. The bad things that happen that are not priced into the goods and services that people are buying. The biggest example of that is what we're dealing with carbon. We're not pricing carbon and what it's doing to the environment, into the climate, into the goods and services that we buy, and because it's not priced in, it's left for somebody else to figure out how to fix. And so the idea of creating a demand that comes from the grassroots for investment changes in the investment system, so that those factors are taken into consideration, is one of the things that I hope it will be out from this book. The injustices, the economic injustice that is caused by these deficits of capitalism, I think, are just going to get worse and worse. So I'll stop now.
So we'll end the sort of direct book talk before we open to our panelists with a little bit more of a tactical question, make sure we're all starting from the same kind of baseline awareness and knowledge. What is impact investing and why is it important? Let's just start there.
All right, I just talked about impact investing without using the word. So let me say that there's been over the last 40 years, maybe 50 years, there's been a movement that's now snowballing toward what was initially called social investing or investing for to avoid certain things that you don't want to have in an investment portfolio. There's a fair amount of discussion in the book about the history of the efforts around the boycotts of the apartheid in South Africa that really led to a huge change, not only economic change, but a change in the regime there. And that was a result of investors saying, we are not going to invest in companies that are doing business in South Africa. And it got to be so large. That's what I mean by demand, right? It got to be so large that companies that were doing business there said, we got to change how we're approaching this. And so that is sort of an antecedent to then what has termed, what for many years was termed as, well, that's negative investing. That you're investing to avoid things that you don't want, like having fossil fuels in your portfolio or something else. And the idea of impact investing is to say, well, you can do that, but you can also go beyond that and be very purposeful in the impact that you want your investments to make. And so that impact investment snowball, if you will, is now really out there, and it's intersecting with an acronym. I don't want to use the acronym too much, but called Environmental, Social, and Governance Investing, or ESG. ESG has become very controversial, but it's absolutely, in my view, and the book talks about this, is absolutely an important consideration in any kind of investing. If you invest in a company that has poor governance, you're likely to lose your money at some point. You know, the companies that have poor governance are the ones that have scandals, and a public company has a scandal, the stock price falls, and there you go. So environmental, obviously, that's on everybody's mind, and that's another consideration. And then the S, social, that's where the community development world fits in. That's where good education, other areas fit into that equation of ESG. And investors can consider each one of those points as they're looking to make investments. Now, most of the time, people aren't doing this themselves. They're doing it through money managers. And so the demand that needs to be created is to create a change in how money managers look at this. Because there's money managers that say, this is not capitalism. You're taking us off the ball of maximizing return. And of course, maximizing return without taking into consideration negative externalities is part of the problem. So that is impact investing. It's intentional. You want to find ways of making an impact in an area that you're particularly concerned about, whether it's education, jobs, business creation, ownership, minority ownership of businesses, all that would be kind of in the area of impact investing. And I have a little graph here. We'll get to that later. Maybe we want to go to this now. I don't remember where this was in our presentation. I'll do it now, because people, oftentimes when you're having a discussion with people who manage money, they say, well, is what you're talking about business or is it charity? Well, that actually is the dichotomy that's false. I think individuals have a spectrum of preferences in their use of their own capital or the capital that they're entrusting to others, and those preferences go across a spectrum. And so we have it in the book. The TV's over there, but you're all looking this way. So we Lauren quickly put this together, and I just want to talk about the way of thinking about this, because if it's business, quote unquote, you're talking about market rate returns, right? You're investing for a market rate return, but you could also seek social benefit. That's the impact investing concept. And so when you invest in a private company, which is on this side of the spectrum, you're making an investment in that where you want a market rate of return. You're taking high risk, you want a high return. that's the riskiest investment you can make. Private companies, small businesses, many fail. And so how do you, you want to have a return that's high in a market rate, in a market setting. If you invest in public companies, well, you have better liquidity, you have a variety of other things that make it a little less risky. Then you can invest in fixed income assets, bonds, stocks, treasury notes. All those things are market rate. And then you can have cash. You can put cash in the bank, as we heard earlier today about how the sponsor of this organization uses banks to both have a market rate of return, but also have an impact on the community. So those are all, in that spectrum of impact investing, those are all market rate tools that can be fashioned to make an investment that is impactful. But then the other side of the equation is, well, what about charity? Well, charity comes in a variety of ways as well. So one area that is increasingly done in the foundation world, but it's also done in the for-profit world, is guarantees. You can get a bank guarantee, you can get other sorts of guarantee to lower the risk of an investment. Foundations have been finding ways of using their endowments, which are not leveraged. They don't borrow a lot of money. They can use their endowments to make guarantees on socially impactful things and de-risk an investment for somebody who might be concerned about it. And then you go through all the other sort of ways you can do senior loans, you can do subordinated loans, and then ultimately the riskiest thing that you can do on the charitable side is to give money away. Because for that charitable contribution, the contribution is being made for social impact. If the impact doesn't occur, you're not going to get your money back. So that's the high risk part of it. But there's also a potential for high impact across the spectrum. So I want you to think about how this continuum of investment can be developed in your own practices and the companies you work for and others. And it's becoming an international phenomenon. There's a Global Impact Investing Center in New York City. There are a number of foundations that are really stepping up and saying we have to think differently about how we use our billions and trillions of dollars worth of endowments, because usually we're going to make a high return in the on the business side, and then we're going to take 5% of that and give it away. But now foundations are saying, well, why don't we use the whole portfolio and make that portfolio work in an impactful way as well? And so it's an exciting time to be thinking about impact investing. And with that, turn it back over to the moderator.
Wonderful. Okay, we're going to see if we can stretch this and open it up to our esteemed panelists, Julia, Alicia, and Tony. And I would love to start with you, Julia, if we can stretch all the way. Otherwise, I might just have to speak loudly. Just introduce yourself. Tell us a little bit about your background and what you do and how you're involved with this topic today.
Thank you. Can you guys hear me?
Yes.
Awesome. So I'm the CEO of Invest, and I'm an advisor at Levesque Consulting. And in both capacities, I help capacity build investors across the capital spectrum to use different tools like the ones that we were just talking about, blended finance, combining public funding with private funding to maximize impact, bringing together new forms of thinking around governance and execution to really manage climate risks, to manage social risks. And some of the types of clients I work with would include real estate fund managers who are integrating net zero targets into their traditional strategies, impact investors who are really putting impact ahead or aligned with their market return strategies, including endowments. So locally, we have a foundation called the Health Foundation of South Florida, which has allocated $5 million of endowment money to impact, and their focus is really on the determinants of health. So how do they invest in affordable housing? How do they invest in job creation, meaningful job creation that helps people get and have a stable source of income for housing? Have wraparound services such as daycare, elderly care, so that the main caretaker or breadwinner can still earn and take care of themselves as well as their family. family. So really thinking holistically about that approach and using not just grant funding, but also balance sheet money to maximize or exponentialize impact, and also bringing around building coalitions. So I work on that, but so do other stakeholders, to bring different stakeholders together to help reduce risk in a project, whether that's the built environment, climate, or subsidizing some of that risk through grant funding as well as public-private partnerships.
Hi, I'm Alicia, and I'll start with my inspiration around becoming an economist and ultimately working in impact investing. My mother's from El Salvador and my father's Cameroonian, and every summer I would go to one or the other, and it became very clear to me that people all over the world want the same things. And one of the things that they want are, to be able to provide for their family, to be able to start businesses, to be able to live, free of violence. And that was really eye-opening for me to move into the economics world as an adult. And I worked initially with more traditional multilaterals, the United Nations, the IMF. And then I did a project in the Dominican Republic and got to know the concept of microfinance. And this was pioneered by Grameen Bank and Mohammed Yunus, and the idea of providing very small loans to mostly women to start businesses. And I became a convert. I thought this was the most beautiful thing. And it had all kinds of social impacts, everything from HIV/AIDS awareness to domestic violence to just that personal sense of liberation and freedom that comes from owning your future. And then I worked for a number of years in South Africa with the community that Frank was talking about, this global community of investors who had done some really incredible, bold things around grinding the apartheid regime to a halt. And it was largely the interfaith community at the time. And that was my entryway to understanding that there was this thing called social impact investing. And now, today, I'm the Chief Investor Relations Officer at a group called Runway that provides capital to underrepresented founders in the United States, Oakland, Chicago, most recently Alabama. And a year and a half ago, I moved to El Salvador, back to El Salvador. And I'm starting to bring some of those ideas to the global South, to Latin America and other places. Because for many years, I would look at the United States and I would say, gosh, there's so much work to do, and there's so much work to do. And then I moved to El Salvador and I'm like, things are pretty good, actually, in the impact investing world. And so what are some of the lessons that we can bring to emerging markets around these concepts?
Thank you. Okay, so I'll do it this way. So I'm Tony Brown. I'm a friend of Frank's. That's how I do. So, Miriam, I'd like to reintroduce your dad. I don't think he gave himself good service or disservice. I've known Frank for over 21 years, 23 to be exact. I was the director of the CDFI Fund, Community Development Financial Institutions, unregulated. We use a lot of acronyms, so I won't assume you know what a CDFI is. Community Development Financial Institution that pretty much gets its money from social investors. So I was the second director appointed to the CDFI Fund and the first director appointed under a Republican administration. And so the administration would ask the question to CDFIs, why should the federal government be investing in CDFIs? And so Frank in his book talks about really the whole governance and the importance of scaling up CDFIs. And so Frank is a pioneer in the CDFI industry. He is a champion, and he is a giant. You heard a lot of theory from Frank. I have also served on 15 years on the board of the Community Reinvestment Fund. And I can tell you that behind this brilliance is a man who built an organization that has done some wonderful things in our community. So when I was appointed director of the fund, of the beloved fund created under the Clinton administration, being the first Republican, I was told, I was directed, we need to make sure that the fund is the best government entity in the federal government or shut it down. So I was a director that implemented the New Markets Tax Credit Program. I had to deal with the administration as to why do we have to invest in CDFIs? So when I met Frank, and he talked about doing the first securitization of buying loans from CDFIs and selling them in the secondary market, the administration actually loved that theory. That has gone to come to become the bond guarantee program. And in his book, he talked about having guaranteed and originated nearly $1 billion worth of bonds, continuing to buy the loans that our small and impactful community development organizations make. You know, Frank gave me credit, but I guess his editor cut me out of the book. So I you know,
And he still came to speak.
I still
so.
came. Well, I came to help carry the books in. But you know, the other thing is Frank was one of the first allocatees of the New Markets Tax Credit Program, and I think one of the largest allocatees at that time, and for about 8 years straight. And you can correct me, I think he was the largest organization to have aggregated close to $1 billion of New Markets Tax Credit activity that has been leveraged about 20-fold. So Frank, I share that to say that you understated your impact to our country, to our nation. I have been honored to work with you, to see what you have done for our communities and what you've done for our industry. So congratulations on the book. And all of you.
I didn't see why I invited him. Oh, thank you very much, Tony. Appreciate it. Now I can just do it.
We're good. We'll just do this way. Awesome. Thanks, Tony. So as I briefly alluded to earlier, I'm I guess a product of impact investing in a way, actually, like myself as an entrepreneur and my company that now is, making big impact as part of a big public company on students globally, actually. And now I'm working on trying to figure out, like, we're doing it. How do we do more for other entrepreneurs, right? So that's like one type of impact investing is investing directly on whichever side of the spectrum it is, I guess, like into, early stage. Private equity, sure. Early stage investment, right? That's like one side of the spectrum. But there's lots of different models of impact investing. And so I thought it would be helpful for our panelists and your experience and expertise to speak to a couple of the different models of impact investing. How they emerge as industry has grown, as my dad, alluded to, and how they become more mainstream. So I think for the sake of the microphone, maybe we'll just kind of like start down the line and then come back this way.
Sorry, Tony. That's okay. So many models. Since the great work that this panel has done, we've really come a long way, I think. Today, we have all kinds of tools across the capital spectrum, from what we talked about on the philanthropy side, like low interest rate loans, what we call PRI or mission related investments. We have much more investment in entrepreneurial ecosystems. I think we see that here. Miami is a great example. We were not the center of tech investment 10, 15 years ago, but the effort of a lot of people, including Eric and a lot of people in the room here, have actually worked hard to seed that ecosystem, to build micro entrepreneurship programs here around Endeavor and other sort of nonprofit players who come in and take, let's say, grant money, help de-risk some of this innovation that we're talking about, bring capital, or at least give opportunity to women and BIPOC entrepreneurs who generally are still highly underfunded and underrepresented in the VC tech ecosystem, despite outperforming in many cases with less capital, and showing that in many, many more exits that we now have as track record for entrepreneurs who were previously kind of treated as, well, there's no evidence that you can make it. Now there is evidence. We're seeing more and more effort at the local level to see these type of ecosystems. I still think that there is work to be done to kind of bring CDFI type players more into the VC high tech conversations and bridging some of those gaps around entrepreneurship that isn't purely software driven. But we're seeing a huge change from 15 years ago. Plus the type of industries that are being funded, the depth and focus on ed tech, climate tech. I mean, Miami is just became an innovation hub for climate tech, according to the National Science Foundation and EDA. And we're going to receive funding to really see that ecosystem and help scale some of the technology with support of our institutional partners like universities. But that type of effort used to be thought of as only regional or focused on Silicon Valley, and that movement has helped empower not only, let's say, U.S. voices, but Latin American voices. I grew up in Latin America. My parents were diplomats, so for me, inequality and access in LATAM is a very important issue. And seeing the market of venture capital go from non-existent to now you have hundreds of VC funds in Brazil, Mexico, even Central America. Yes, they're still small. Yes, there's still work to like scale those businesses to other nations, but the ability to leapfrog and really build systems and networks of entrepreneurs has really changed over the past decade.
So I would say the theme that most interests me that I've been working on is a concept that's grown out of the impact investing movement called restorative investing. And it's the idea that there is repair that needs to be part of the modeling that comes out of the investment community. And it's really a call to action for impact investing to live up to its most courageous self. Over the last, the good news is that a lot of people have entered the impact investing space, have become more prominent voices, and have really, had an impact on the evolution of the sector. However, there are more, I would say, traditional or mainstream ideologies around, stakeholder primacy, around maximizing interest rates and maximizing returns that has also seeped into the impact investing community in ways that I think are troublesome. And so restorative investing was a concept that grew out of Native American movements, African American movements, looking at the impact of redlining, looking at the history of divestment and what needs to happen for particularly entrepreneurs of color to be able to access friends and family capital when the racial wealth gap says that your friends and your family may not have the capital that's needed to start and grow businesses. So what I do when I'm working with underrepresented, either social enterprise leaders, is really hear what their needs are and then work to advocate for capital allocators to show up with regard to those. So, today you can have 0% interest loans, you can have capital preservation, you can have, 2, 3, up to 8%. And that is something that is really important. But a lot of people still aren't ready, willing, and able to take those returns. People still want the, high levels of return and the social impact. And I think it needs to be clear that that's not always possible. We really need to start advocating for a fundamental question that needs to take shape in impact investing, which is how much is enough? And what are we willing to do? What sacrifices are we willing to make in order for underrepresented communities to really have access to all of the opportunities that have been enjoyed by other people? So that is something that has seen a lot of interest and excitement, something I advocate for, and something that I'm hoping to see take shape in Latin America and Africa as well, where there's a lot of lessons to learn from those movements here.
So I think the question is, what's the best impact investment model I've seen? And so I would answer that simply, a loan to me. Or an investment to one of my ideas. And I say that somewhat seriously, right? My colleagues here have shared their background. I grew up poor. I grew up with a welfare mother, single welfare mother in the projects of Cincinnati. My first job was in banking. My first job in banking was managing a branch in Boca Raton. So you talk about understanding this economic disparity. I was in the middle of it. I didn't get intimidated by it though. My wealthy customers, I asked, how did you make your money? My businesses that were very successful, I asked, how did they get started in business? I've had the privilege of banking the founders of Office Depot. I've had the opportunity to talk directly with Wayne Huizenga and Wayne Huizenga Jr. to understand their business model. Frank talks about in his book, Scale, Growing to Scale. So when you talk to the founders of Office Depot, it was simply they were the founders of what is, I guess, today Home Depot. They took a concept that was very decentralized. They found a way to centralize it and grow it to scale. If you know anything about Huizinga, he did the same thing with Waste Management and Blockbuster, right? Very decentralized, being innovative. And they had ideas and they found ways to get bankable. In my career, I've had the opportunity to help the Kroger Company put grocery stores in low-income communities. Today, I like to think that my niche is transforming neighborhoods. I'm proud that the Related Group here in Miami is an investment partner. And I think that, and so though I said the best impact model is investing in me, it's that investment in me and that encouragement from my mom to invest in my education, to be lucky, to be in the right place at the right time, and to then have the foresight to say, how can I turn that into a way that I can make money for myself and my family and still do good for my community? So that passion, I think, of transforming neighborhoods, putting grocery stores into communities that are food deserts, and then being able to convince a company like the Kroger Company to take advantage of New Markets tax credits and other things to do that. And that, but for the grace of God, to have been appointed to the CDFI fund, to have implemented the New Markets tax credit program, there was no way I could have gotten into the corporate office of a Home Depot. Having transformed Riviera Beach as a redevelopment director, there's no way I would have gotten into the offices of a Related Group. And so those of you who are still in school or who have just graduated and you've invested in your education and you know what your career is going to do for you, the thing is, when you have that great idea, right? I didn't have a rich parent. I didn't have a rich uncle or someone to go to. And all the things that Frank talked about in seeing economic disparity, particularly in the Black community, I've lived it. And I think that I've been lucky in many cases where education and preparation has provided the opportunity. So an impact investment model for me is I got a great idea and we invested in it.
So Tony, I just want to make a couple of comments on racial disparity, because that's a big part of the book. There's a whole chapter on the impact of the murder of George Floyd, which occurred blocks away from our headquarters office in Minneapolis, and a neighborhood that I used to go through all the time on the bus. When that happened, we looked at really trying to understand whether or not what we were doing as a financial organization was solving the problem or continuing the problem. And so I told our team, I said, I want you to interrogate our policies, our programs, and our procedures to root out any non-intentional bias. And I wanted to understand, where is the bias? Because you look at banking, with all of the rules and regulations that banks have had over the years, fair lending, Community Reinvestment Act, there's still a situation where people of color, particularly African Americans, who are in the same, more or less the same situation as other peers, are not getting financed. So what is it? What is it? I wanted to just give you an example. When we did that, we started talking about, how many loan applications do we get that from African Americans that are never completed? And there was a much higher percentage than from non-African Americans. Well, what do you think is? Tell me more about why you think that is. And so one of our credit officers, who also is a person of color, said, well, when we ask for personal, what am I trying to say here? No, key person insurance. I gotta get it. Key person insurance. It's not key man anymore.
But I'm an old banker.
Okay. Many African American entrepreneurs say, well, I can't get that. I can't afford it. I just can't move forward with it. And so I said, well, why is that? And he said, well, you know that the insurance rates, life insurance rates for African Americans are higher than they are for non-African Americans at the same age, because African Americans have a shorter life expectancy over time. All right. So then my question was, how many times in 25 plus years have we actually filed and gotten a claim on a key person insurance? 3. Why are we doing this? Well, that's what we do in the banking world. We get abundance of caution. There's somebody who looks like they might be at a certain age, and if they die, the company's going to go, or if they get disabled, or get hit by a bus, or whatever, the company's going to go under. So we want to have some way of getting repaid. Well, that's one example of this unintentional bias that has seeped into many of our industries in the way that we think. And George Floyd gave us the opportunity to step down and cover some of those things. The hidden bias is everywhere, and I know it's very controversial to say that we have a biased economy, but we do. That's my personal understanding from our own experience of a group that is literally there to try to help get capital into promising small businesses owned by people of color, women, and other minorities. So that's an example, I think, that speaks to what you were saying. Many people that are trying to raise capital from conventional financing will run into that same issue. So I'll give it back to the boss.
We could keep going with questions directly for the panel, but I do want to give the audience an opportunity to ask a few questions before we break for the evening. Anyone would like to start us off? Yeah. Fingers have to talk loud. I don't think this is going to stretch all that way.
So two-part question here. So earlier you mentioned that ESG was controversial. I'd love to just hear your opinion on that. I've heard the same as well, but I don't understand why. And then secondly, was Miriam well behaved as a child?
All right, now I'll answer the second question first. Miriam was the firstborn, so of course she was well behaved. And her sister was known as Rascal. So no, they're both wonderful kids, and when you're a parent, and there's a certain time when your kids think you don't know anything, and then all of a sudden you realize they really got it. All right, so now I forgot your first question. ESG.
You said it was controversial. Why? I've heard that as well.
So if you go back to there's a tug of war in capitalism and capitalist theory that goes back to I can't say his name, Professor Milton Friedman, who won the Nobel Prize, espoused this notion that the purpose of the firm was to maximize shareholder return, and that was it. That's maximizing shareholder return. So all these things I talk about with externalities and so forth, not part of the purpose of the firm. Maximize shareholder profit, if you will, value. More recently, companies have begun to realize that they need to look at more than just a shareholder, because by not looking at these other factors, whether it's environmental, are they a good place to work? How's their community around them? A company that is surrounded by crime and poverty doesn't do well. So a few years ago, the Business Roundtable, which is the largest companies in the United States, came up with a new vision, and it really was called stakeholder capitalism. That the firm exists, that corporations exist not just to serve their shareholders, but to serve their stakeholders, whether that's their employees, their communities, their customers, and others. And it was a very radical departure from these big companies that kind of were going against the concept of one purpose of a company was of the firm was to maximize shareholder value. So there's still tension there, and it's gotten politicized. That's an issue, and so this idea of ESG gets put into this concept of stakeholder capitalism, of thinking about more broadly about the role of the firm than just maximizing the shareholder capital. And a lot of money managers and economists and others who follow that other approach are saying, well, this is baloney. You're going to reduce returns. I'm not going to look this good if I start investing like you're asking me to. My comparison with the benchmark is going to go down and all that kind of thing. By the way, many of the ESG funds are doing just fine in terms of benchmarks. But nonetheless, that's a concern. I want to raise one other one that is also implicit in the book, and that's diversity, equity, inclusion, and how that has also become politicized, and it is the right thing to do. I had the opportunity today to take a nice walk in South Beach, and my kids are going to be brief about this, but I see this big blue path that goes up over the dunes, and I look at that and say, that is inclusion. And nobody talks about it anymore, but I was involved when I was part of the state of Minnesota in creating Minnesota's first accessibility code. And oh my God, were people against that. What do you mean I have to cut my curbs and change my toilet heights and all this stuff? It represents a fundamental commitment in our polity to including people who have mobility and other impairments. So that's a visual example. Nobody talks about it anymore. In fact, diversity in many cases, and when you look at curb cuts, they not only help people in a wheelchair, they help the guy pulling a roller bag that's walking down the sidewalk and has something on wheels. Accessibility, inclusion, and it doesn't exclude anybody. It brings more people in. And so those two things, I talk about them both in the book a little bit, but those two things are becoming more and more politicized. And frankly, I think we need to have strong advocacy for why they are important. Okay.
Take some other questions.
I'll try to be quiet. I'll try to be shorter in my answers. Okay.
If you don't mind saying your name too, that'd be great.
Oh, sure. My name's Tony.
Hey, nice name, man.
Oh, Anthony. How do you speak more about organic demand, or rather the concern by a lot of critics on ESG that there's not enough organic demand in the market for, like what happened with Ford. Ford Motor Company took a multi-billion-dollar loss in recent years because they put all this money into electric and nobody wants them. Nobody can afford them. That the costs are too high, and that we're sort of trying to force an idealistic scheme onto the market that's not really ready to have it. And maximizing shareholder value is sort of the way it always works, because at the end of the day, companies need to make money. Now, obviously, we all want to care, but we want to be more concerned about the environment and governance. But how do you respond to that? How do we create organic demand without forcing companies into a really untenable position?
Could I open it to the panel?
Sure,
See if
go
anyone
ahead.
has a comment on that first. Yeah, go for it.
Well, there's so many facets to this. One, on the EV example, there is demand for EVs, and actually there's more demand than there is even available supply. The costs have been going down dramatically. So, for example, the Ford Mustang Mach-E is, I believe, $45,000. I mean, that's not cheap, right? But there's a Nissan Leaf, which is quite cheap and has gotten stronger and stronger in battery capacity over the years, and many municipalities are buying them, including the county of Miami-Dade and Coral Gables, for example, for like parking meter drivers. But this was a compounding issue that happened because of geopolitics and COVID. There was the supply chain constraints. Semiconductors were being, for both political and supply reasons, kind of fence walled in China. So that semiconductors in electric vehicles are much more prevalent than in traditional vehicles. So you need, I think, and I may be wrong, but like 4,000 semiconductors per car, because a lot of it is almost like a computer, right? So there's more factors on that side that were slowing down the production capacity. You have still the cost of the batteries high, but it's decreasing every year. And electrification does seem to be, so far, despite the rare earth externalities, the mining externalities, still has a lower emissions life cycle over the life of the vehicle. So, and we're in that transition period where the costs are declining, demand is increasing, charging is more available, and people's fear of range anxiety is shifting. So despite all those factors, I still believe electric vehicles doubled on the road year over year. So we're about 6% of vehicles on the road are electric now. And it's still predicted to exponentially grow over the next decade, with China leading, and China having a different approach I mean, despite geopolitical issues, they installed more solar capacity last year than the U.S. has in its history, and are kind of catapulting ahead of us on that technology. So, do we want to be left behind? Is another question. But that's specifically on that. I mean, you also had, just to be specific on ESG performance, you're still seeing on the demand side, the consumer wants it. The next gen wants to work at companies that care about it. They're more loyal to them. They work harder. The retention is better. People want to work in workforces that support their other needs and values. And maybe those are not always the same. And that's where ESG gets thrown in. Like, everyone agrees on everything. No, you can have different values and still express them through the environment. Like, a lot of religious groups are very pro climate action. Maybe they don't all agree on the way women's rights are supported, but they all might have other things that they agree upon and invest upon in union. So I think there's also a misinterpretation, like we're discussing. The financial investor can really determine the scope of ESG in their portfolio. And then last but not least, on the macro picture, you had oil and gas crisis that led to oil and gas outperforming when everything else underperformed. Is that sustainable long term? I don't think so. Did it drive up prices in every other aspect? Yes, and inflation. But so really, we should double down on energy independence and climate investment to avoid being exposed to those risks long term.
We'll maybe take one or two more
I wanted
questions.
to, I just wanted to address, because you asked specifically about Ford. And Ford was, Tesla set the bar very high. And they came at their car as a tech company. And the automobile company, the majors, Ford, General Motors and others, really were not tech companies. They were very good at the internal combustion engine and all that sort of thing. And so I think Ford and GM both are having a lot of issues with the demand for their vehicles, as opposed to EV in general. And I think you have to look at the consumers discerning where do they want to be. And I think right now everybody's really high about the Ioniq 6 at Hyundai, for example. They're just it's a competitive marketplace, and the market is starting to readjust to the fact that there is demand, but there are also bottlenecks. And I think that's what we're seeing in Ford and
Well, I drive a Ioniq 4 and I still prefer a hybrid.
well, that's the Republican in the group.
Maria?
Hi, my name is Maria Meyer, and I'm the Executive Director of the Women's Fund. I have two questions, and I'll try and be short. One, we have a small endowment, but we're switching now. We have RFPs for our endowment, and it's down to two candidates. And the last question we were asking for SDGs. What are your policies? Women-run companies, et cetera. We asked two of them to do comparison. Very interestingly, one of the highest returns from one of the candidates was for the ESG fund over 5 years, but they didn't have it for 10. And the other competitor, who's, spoiler alert, nobody tell them, but is obviously going to lose, was going to charge us more money for the ESG funds, a higher percentage of fees. It's really, really interesting to look at. So my first question is, and maybe it's in the book, is there a place, because we'll make our decisions now, but we're going to have to keep on being smart. We're always iterating. It's always a new day. Where's the best place to make sure that an ESG is really being an ESG, that it's not greenwashing, or how do we find the best practices? What's the easiest place to go for people who don't have time to be looking all day long? That's the first part of the question.
Well, I would say that's called USSIF, US-SIF, which used to be the Social Investment Forum, but the USSIF is the trade association for money managers primarily, and others in the community investing world that are really focused and expert in the ESG type of investing. So they're a nonprofit membership organization. They have many registered investment advisors and others that are in the space I think that you're looking for. So if you want, they have a great website if you want to start that would be a good place to start. Another place is the Global Impact Investing Network, which is in New York. Those would be two that I would suggest.
Any other suggestions from our panelists?
I was going to also say GIN,
Yeah.
the Global Impact Investing Network.
One more question? I saw a couple hands back there. Go ahead.
Hi, so as a fellow Brunonian, I share your desire for social impact. And as a result, I've been working with a nonprofit for quite many years of trying to focus on gender equity in the financial services industry. So I work with student groups to really educate them and get them a mentoring group to put them in places in financial institutions. We all know that we've come a huge way as women in the industry, yet we're so far away from the numbers that we really should be hitting. So I really am curious to know, I mean, I'm all about the new capitalism as well. And I think it's great, there's women's funds and people are working from the ground up in small organic grassroots efforts. But how can we get, in your opinion, the large corporations, which is what I work on, and getting my students into these internships and then making their way slowly up to the C-suite, because that's where I think that the fundamental changes are going to be. But I'm just curious, your opinion, anyone out there, of what needs to change in like the corporate America psyche, like the people who are in those powerful positions now, to make this happen in a quicker pace.
Throw it to Elise here.
Well, I guess someone in my own experience, it's really down to corporate responsibility. The companies who feel that a diverse management group is, if you're in banking, if you walk into a branch or if you see a commercial, it comes down to who's exercising, in my opinion, corporate responsibility. And how do we do that, or how do we get that? I guess maybe we as consumers, we can vote by our pocketbook if we don't see it. And then oftentimes that has happened in my community where we have boycotted certain companies when it has been apparent that they have practices that have been discriminatory, and particularly when I was, younger, when that was more of an issue than today. I'm in Tampa Bay, and I work for the Tampa Bay Economic Development Council. So we recruit companies into Hillsborough County, and people perceive our governor's attack on wokeism or whatever as being anti-diversity, and so many of those companies ask us, is that impacting the workforce and their ability to hire a diverse work group? So all those things, I don't know if there's a magic bullet I can say other than, that we have to be diligent and aware, and where we can influence it, do it. And in many cases, you can do it by where you spend your money.
I think that the thing I'll add to that is that it is really tricky in a world when regulation and policy isn't incentivizing, if you will, corporations to do the right thing, then it becomes very challenging to make them do it. And so a lot of the time, so for instance, we talk, I work particularly in the banking sector, helping banks do a better job of lending to communities of color, entrepreneurs of color, women. And the one regulatory framework that exists right now are the Community Reinvestment Acts, right? But that could be a bank giving money to a gala, and that will satisfy some of those requirements. That's a bank giving money to a local nonprofit. They don't have to do any reporting on how much of their lending went to African Americans, went to women. That's just not something that they have to do. So instead, we're relying on C-suite chief executives who are deciding from their own accord that this is important to them. And I think that's great, but that's also a challenge, because once that person is replaced, and I've seen this happen quite a number of times, where you get a very good-hearted, well-intentioned CEO of a bank who wants to do it differently, brings in people to do it differently. As soon as that person is ousted, then it's very hard to continue with that legacy. So one example that I'll give is a group called White Men for Racial Justice, and it was started by a friend and colleague of mine, Jay Cohen, who also started the B Corp. So you might have heard of the B Corps, and they are a certifying agency of social enterprises that are deciding that environmental and social is going to be part of the fabric of their small businesses. So he got together with, I think it was about 60 CEOs and C-suite level white men executives from around the country, and they started going on these learning journeys together about how they can influence their organizations in really impactful ways from a racial equity lens. So, I agree with Tony that it's few and far between. A lot of these efforts are small and grassroots, and I think that, again, looking at young people, a lot is changing with the newer generations, wealth holders, things of that notion, and we were talking about it earlier, that there's a tension between older philanthropists and impact investors and young people who really want to shake things up and really want to give all of the money back. So unfortunately, without government regulation, which has its pros and cons, but that's really what we have to move society forward in the ways that we've described, aside from people just deciding that it's the right thing to do.
Hold the microphone for a second. I'm going to take the moderator's last question privilege for each of our panelists. I'm going to put you on the spot a little bit because this is off the script. But what's your biggest call to action for our audience here today as we wrap things up?
For those who are interested in impact investing, interested in the way that capital is allocated towards social outcomes, try to figure out how you can move the conversation courageously. Time is short, things are very urgent. George Floyd really ushered in a new way of philanthropy that was very trust-based. There's a lot of trust-based philanthropists coming out, but a lot of the conversation, I think, has to move into really bold and courageous places that is not just recreating the dominant infrastructure in a new way. So I say, don't be afraid to be the one who is asking a lot of questions and is trying to move things forward, because that's what's really needed.
Thank you. I think, first of all, read Frank's book. That would be one thing. But, and I mean that because he gives you so many data, context, and tools to kind of frame why did we get here, why does it matter, and why must it stay this way? I mean, stay this way in the sense of us doubling down on impact and other non-financial data to inform systemic risk in a complex world that we're growingly aware of, right? So what can you guys do? Maybe go home and look at your investments and think, does this align with who I am and what I want to see in the world? And okay, some of us might be at different ages, but the younger people, you can take more risk. You don't have to retire yet. And plus, in 60 or 70 years, well, let's say you retire sooner, hopefully, and sooner than that, the world will be very different. Are you investing in that future that you want to see? So maybe you take a little bit more risk capital and invest it in the people and the themes that you care about. Challenge your financial advisors who are going to say, don't take more risk, but say, isn't this more risky to stay the same if everything, is underwater in 40 years? And that goes for all of us in Miami who live on the shore here. So yeah, and I think we talked about pensions and IRAs, ask for options, alternatives. Of course, the system, like we said, there's a lot of pushback right now. So your voice needs to be heard extra loud, right? And we talked a little bit about DEI and anti-woke movement, and there was just some research on how some very fringe alt-right movements are really pushing this forward, who are, aligned with neo-Nazis and things like that. We really need to be aware and move the needle back to the mainstream, which is actually mostly agrees that diversity and expression and pursuit of happiness for all is critical to the American dream.
So the call to action, we didn't get a chance to hear from you to see why you came out this evening. So thank you. And thank you, Frank, for your book. I guess there was something that Frank said in his book that he hoped his legacy is that capitalism fix the shortcomings and provide something for social enterprise, fix the shortcomings and provide capital for social enterprise. So I think I heard in the audience, several of you with nonprofit organizations, so evidently you have your mission driven. And so hopefully you heard something tonight that might sharpen your pitch to whoever your investor, philanthropist that might be that would invest in in your mission. Maybe some of you are a consumer, and as I said, an impact model is, I want to be a first-time home buyer. I have very little money to put down. So who's lending to first-time home buyers? I'm an entrepreneur who's lending to small businesses. So I think hopefully what you heard is a little bit of everything that allows you not to feel daunted and encouraged, because what you do, if you run a nonprofit and you are one of those social enterprises, Frank says it will help the shortcomings of capitalism, continue to do what you do. And if you're someone hoping that someone will invest in your next great idea, keep the faith and keep trying.
My call to action is to get a wireless mic. So first of all, I do hope that the book inspires you, or this talk has inspired you to investigate further, particularly about the opportunity to be supportive of or become a social entrepreneur. And by that, I don't mean necessarily you have to be a nonprofit. There are many social enterprises now that are benefit corporations, so they're incorporated with a specific purpose. B corporations is like a seal of approval, but benefit corporations are the founding documents, basis on which many corporations are now, or companies are now creating their fundamental documents. And when the state of Delaware, which is where most corporations are incorporated, adopted a benefit corporation choice, that really has opened it up to many companies that want to be for profit but don't want to be beholden specifically to this idea of maximizing profit for shareholders. They really want to be able to show that they're working toward a particular mission. So that's one aspect of this. Go out and become a social entrepreneur if you're so inclined. Demand that the people managing your money give you options. Exactly. Here's an example. Federal government, hundreds of thousands of employees, prohibits a choice for a social investment option. And Congress has had a bill in front of it now for, 10 years. It never seems to get passed. It just would say you don't have to take anything away, but just give the folks that are in the federal pension and retirement system the option to invest if they want to. So that requires advocacy, and advocacy is a huge part of how an economy works. Nobody lives in a free economy. This is not a free economy. This is a regulated economy, and it's regulated in ways you don't even think about it. You go back to the great Peruvian economist Hernandez de Soto, who looked at the United States and said, what you have that we don't have in Latin America and other places is a great way of documenting ownership. So capitalism fundamentally is about ownership of capital and then returns of that capital. So we have titles, we buy real estate, we have all that kind of stuff. That's a regulation. That didn't just come out of nowhere. That's how capitalism inside of a regulated industry, a regulated system operates. And so we can advocate for changes in regulation that improve capitalism, reduce the ability to put negative externalities into the environment or into the world, and that oftentimes is regulation. So it is advocacy. It is looking at your own personal bank accounts and investments. It's looking at your state pension funds and seeing whether or not they allow or are considering ESG or other factors. Those are all things that need to be broken through, if you will, if the new capitalism is going to take stake. So maybe I'll leave it there. I do want to say a couple of things. I do want to acknowledge we have, I don't know where Terry went, maybe she's hiding, but we have two people with us tonight from Forbes Publishing that is the publisher of my book. And so I just wanted to say thank you for driving down from Tampa today. And we have several. Several good friends and neighbors who have come to this event, and so I want to thank you for coming. And to all of you who are hopefully new friends and colleagues, I'm very excited about the future. I'm very excited about continuing to work in this community because we are here half the time, and my daughter's here the whole time. So anyway, just thank you all for coming, and why don't we leave it there? I'll let you close it off.
I'll close this up. I agree with the sort of call to actions that everybody on the panel has said. And like I said, my bent is really social enterprise. So nonprofit's really important model. I'm a new board member of a nonprofit in this room, the Women's Fund. But I also really deeply believe that you can both do well as a business and be sustainable and grow as a business, and also have a really positive social impact. I'm, again, a product of sort of experiencing that. And that's why with my current venture, that's really who we're investing in. So whether it's, startups aren't for everyone, they're high risk, but, think about how might you support, startups, startup entrepreneurs, whether they're people in your family or your community. If you are compelled to make an investment, consider it. But if it's not, startup, certainly there's a whole sort of way up the chain that you can make a big impact. Yes, exactly. So right back to our diagram here. So I want to thank you again so much for being here. We have books in the back that my dad is happy to sign, so he's going to scoot back there in case anyone would like to get a signed copy. And otherwise, we have this room actually until 8:30. It's 11:30, not that late. 8:30. Just anticipating, Miami time a little bit, and we experienced that a little bit tonight. So feel free to connect with panelists, connect with each other, connect with the author, have more snacks, and definitely check out the book as well. We've got plenty of copies. And again, thank you so much for being here. We really appreciate it, and enjoy the evening.